Hey everyone, welcome back for another deep dive. Today we're going to dig into Cava Group.
Okay.
Yeah, that Mediterranean fast casual spot. If you follow the markets, you've probably noticed their stock ticker, Cava. It's been kind of on a wild ride. It hit a high of $172.43.
Wow.
But today, March 20th, 2025, it's sitting around $84.77.
That's a big drop.
That is more than a 50% drop.
Yeah.
So with a dip like that, we want to know, is this a good time to buy shares?
That's a really good question.
Yeah.
And it's the question we're going to try to tackle today. We're going to be looking at a new analysis from the Motley Fool,
Okay.
published today, March 20th, 2025.
Out off the presses.
Yeah, we're going to go through this article and try to pull out the key takeaways and give you a better understanding of Cava and their stock.
Awesome. Let's jump right in. This article goes straight to a really important part of growth stocks, like Cava, and that's how fast the business is growing. Investors are looking at how the company's expanding.
Right.
One of the key indicators of a restaurant chain's organic growth is something called same-restaurant sales, or comps.
Oh, yeah. Comps are basically how much money existing Cava locations are making. Locations that have been open for at least a year.
At least a year.
It takes away the impact of opening new stores, so you can really get a sense of how the brand is resonating with customers at established locations.
Oh, okay. That makes sense.
It gives you a picture of the brand's health over time.
So how has Cava been doing?
Well, in the last 3 months of 2024, they had a 21.2% jump in comps.
Wow.
For the whole year, they still had a really strong 13.4%, just to put that in perspective.
Yeah.
The article mentions that even single-digit growth in this industry is a really good sign. For example, Chipotle had 7.4% growth last year.
Okay.
So Cava's numbers are looking really good.
But it sounds like things are changing a bit this year.
Yeah, it looks like there might be a bit of a slowdown.
Okay.
Cava's management is predicting that comps will be between 6 and 8% for this year.
That's still growth.
Yeah, it's still growth. I mean, a lot of companies would be happy with 6 to 8% growth, but it is a pretty noticeable step down from the double-digit figures we just talked about.
Yeah, it's a big difference. The article also mentions that this forecast is actually below what Wall Street analysts were expecting.
Uh-huh.
You're thinking more like 8.2%, so that's a pretty big miss.
Right.
And then the article raises an interesting question. It asks, could even that 6 to 8% be too optimistic because of the broader economic
The
situation?
global economy.
Yeah, like tariffs and trade wars. Could that trickle down and affect a restaurant chain like Cava?
Yeah, I mean, just think about tariffs on imported ingredients could really increase their cost of goods, which could hurt their profit margins and then make it even harder to hit those growth goals.
Right, so it's not just like people not going to Cava as much. It's like external factors.
External factors that could impact their business.
And this slowdown is important
Yeah.
because Cava has been this high-growth stock. And so it's been trading at a premium. Investors were willing to pay more because they thought it was going to keep growing so fast.
Makes sense.
But if that growth slows down, investors might start to rethink that premium.
Yeah, they might.
Which brings us to the next big question. How is the market valuing Cava right now? The article says that investors have been happy to pay a higher price for Cava because they were expecting big growth. But even though the stock price has come down, and that's brought the valuation down a little, the numbers are still pretty high.
Yeah.
What does it look like?
So even after that big drop, Cava is still trading at over 70 times.
70.
Its trailing profits.
Wow.
That's considered pretty high, especially compared to more mature, slower growing companies. It suggests that investors still think Cava's earnings are going to grow a lot in the future.
They're betting on the future.
They are, and we should mention that their recent profits got a bump from some tax adjustments.
Okay.
So that 70 times number might even be understating
Understating things.
a little bit.
So what about looking forward?
Well, the forward PE, which is based on analysts' predictions about earnings for the next year,
Okay.
is over 130.
That's huge.
It is. The market really seems to think Cava is going to make a lot of money in the coming years.
Even though the price has gone down
Yeah.
and growth is slowing,
Yeah.
the market still loves them.
Seems like it.
But it can't be all doom and gloom, can it?
Not necessarily. The article does give some reasons to be optimistic.
Okay, so tell me about this counter-argument.
So even with the slowdown, Cava is still growing at a pretty good rate, they're saying that, in the current economic climate, showing consistent growth and keeping customers coming back.
Customer loyalty.
Yeah. might be more important than huge profits right now.
Okay.
Like, if people are excited about Cava and sales keep going up, that's a good sign that they'll be profitable in the future.
Right. So maybe it's not all about short-term wins. It's about long-term potential.
Exactly.
I mean, the article says that it's really hard to keep having double-digit growth year after year, especially as companies get bigger.
It's tough.
So maybe 6 to 8% growth is still pretty good. It shows they're still on the right track.
I think that's a good point. And let's not forget about their size.
Yeah, they're not a Chipotle yet.
They're not. They only have 367 locations. That was the number in the most recent quarter.
Compared to other big chains, that's still pretty small. So they have room to grow.
They do.
And maybe, because they're smaller, they can be more flexible and build a really loyal customer base.
Like you said, in their existing markets.
Yeah, and this all feeds into that argument that for investors with a long-term perspective, Cava could still be a good investment.
A good long-term investment.
And maybe, this lower stock price is actually a good entry point.
Oh, you mean like a buying opportunity.
Exactly.
I see what you're saying.
The stock's on sale, so if you believe in the brand and you think they'll keep growing, now might be the time to jump in.
It's definitely something to think about.
Before we get too deep into whether or not you should buy Cava, it's important to consider where this information is coming from.
That's always important. You have to be aware of potential biases and conflicts of interest.
So what did the article say about the Motley Fool's own investments and recommendations?
Well, they disclose that the Motley Fool holds positions in and recommends both Chipotle Mexican Grill and Cava Group. So they like both of those companies.
It's good to know they're transparent about that.
Transparency is key.
They also mentioned something about an options strategy.
Oh, yeah, they recommended shorting March 2025 $58 call options on Chipotle.
I'm not going to pretend to understand options right now.
That's okay. It's a more advanced trading technique.
But it's good that they're disclosing it.
It is. And the author of this article, David Jadielski, doesn't have any personal positions in these stocks. And the Motley Fool has a public disclosure policy, so you can see how they handle these situations.
Okay, so they're being open and honest.
They are.
That's always good. So to recap everything, Cava's stock has gone down a lot. And although they're still growing, the rate of growth is expected to slow down, and the stock's valuation is still pretty high.
Even with the price drop.
Exactly. But the article does give us some reasons to be optimistic. They're saying that Cava's continued growth and customer loyalty are good signs. Plus, they're smaller than other chains, so they still have room to expand. So the big question is, should you buy shares of Cava right now?
The million-dollar question.
The article gives us both sides of the story, the risks and the potential rewards. So it's really up to you to decide. I think the big takeaway here is that when you're thinking about investing in a growth stock like Cava, which has a high valuation and is seeing slower growth, you have to ask yourself, how important is that ongoing growth to me versus how profitable the company is right now?
That's a good question. And don't forget about your own investment timeline and your risk tolerance. Are you in it for the long haul, or are you looking for quick gains? Only you can answer that.
I think that's a great place to end it.
I think so too.
I hope this was helpful for you, and we'll see you next time for another deep dive.